I would next like to call upon Mr. Johnny Kahlbetzer, Twynam Investments, with Mr. Satya Seshadri, IIT Madras, to start our expert talk on investing in climate, an international perspective.
Satya and Johnny, thank you very much, both of you. I was told by some of the audience that, Narsi, you may also have to give a quick introduction about some of these guys, because while they're going to introduce themselves, we also have an equation with them, and maybe I'll be able to add a few additional tidbits. So, well, Johnny is a new friend to me. We came to know each other maybe a week back. So I'll get to know a lot more about him. But from the little I've read about him and researched, I think he's one of the few guys who has, from the venture capital investment side, who seems to have a deep interest in the agricultural and farming ecosystem. So that should take care of a lot of explanations I want to give about him, because I think farming, agri, bio is perhaps one of the fields that's not been really emphasized as much as a lot more exciting fields like storage and energy efficiency. All those are important as well, but when it comes to net zero, when it comes to sustainability, I think bio takes a huge importance, and Johnny comes from that. Satya, well, of course, it needs very little introduction. All the same, I think I must here say that the reason I put Satya with Johnny was, first, of course, Satya got Johnny over here, but more importantly, I think Satya has been doing a lot of work outside of being a professor. One of the many other hats he wears is as somebody who helps investors either as a professor or a startup mentor, or in the form now as in the form of IndusDC, also as a venture studio. I think it's going to be a great combination. Get along, guys. Thank you.
Thank you, Narsi. Thanks for the quick intro. So it's my pleasure to invite Johnny. Johnny Kahlbetzer is the CEO of Twynam Group, where he's led its transformation from a major agribusiness into a global climate tech investor through the Twynam Earth Fund. I think since '91, he's championed bold system-changing innovations across food, energy, ocean health, and the circular economy, with a focus on scalable, profitable solutions that deliver real-world climate impact. And that's also one of the fundamental theses at IndusDC that we are building, is to look at sustainable, not just from the carbon footprint balance sheet, but also an economic balance sheet. So it's a pleasure to have you, Johnny. Thank you very much for coming down from Australia for this discussion. So I think maybe we'll quickly start off with maybe a short your perspective on climate investing. A lot of people out here want to invest, but I thought maybe given your background, you could share some thoughts on it.
Thanks for that. Does anyone hear me up the back? It doesn't seem dead. Let's try that. So, as you mentioned, fundamentally we're of the view that the only way the world can decarbonise is through the consumers and businesses' hip pocket. By that we mean it's got to be as good in how it performs and at least the same cost, if not cheaper, than the incumbents. So unit cost economics drives all our decision making. We also have a very sceptical view on any technologies or processes that require a subsidy or a carbon credit. There are a couple of exceptions to the latter. So yeah, I think that stands us a fair way apart from many of the other investors in the space, and we've been on this sort of thought process for a long time. Given the political changes out of the US, we're seeing a lot of the climate funds sort of changing more to economic investors, but it'll be interesting to see how they change as the wind changes constantly. But yeah.
Excellent. So, I mean, that's for saying we don't really do ESG for the sake of it, but real impact.
Yeah, like you're not going to get real impact unless people can make money out of it. So we have a saying, you can't be green if you're in the red. So whether investors need to get good returns and businesses need to be profitable to be viable and get funding from banking facilities, etc., over time as they grow and mature.
It's interesting. So maybe dialing back a little bit to your experience in the agri-business and now focusing on climate action. So would you be able to draw some parallels on the agriculture and climate action?
That I think is difficult. I'll just touch, like we were the largest agricultural producers in Australia and also interests in Argentina, we've been farmed in Sudan, we've been all over the place. We controlled about 500,000 hectares at our peak. Rice, cotton, wheat, cattle and sheep in Australia, and soybean and corn as well in Argentina. Agriculture, you're a price taker. So that's something very different to most industries, and most people can't get their mind around it. Like most people have one input which is a variable, and their sale price they determine. Well, in agriculture, you've got variables all around you. So climate tech, they're both high risk, high reward, potentially, but yeah, I'm not sure there's a whole lot of similarity. The difficult thing with ag tech is actually the adoption process. So we see a lot of technologies and companies come to us wanting to raise money, etc., and we look at their adoption assumptions, and generally they follow the same as any other industry adoption. So there's goes along and then does a big hockey stick. Our experience in agriculture is that that's not a viable adoption profile. Farmers are generally asset-rich, cash-poor, and they are very slow adopters of new technology in general.
Now, you also mentioned, at least as I browsed through your website in details, that you're looking at not incremental, but really step change kind of innovations. And what do you see some of those in agri-tech? Because industrial decarbonization, we are looking at more mitigation oriented and implemented on short term. But agri is an area that we don't talk much about, but it still contributes roughly over 30% of the CO2 footprint.
Yeah, so in the Twynam Earth Fund, which has been in existence for about 2.5 years now, and we've closed and we've just about fully deployed the capital in that, we have 2 ag investments, one being a technology looking to decrease the methane emissions from ruminants, predominantly cattle, so that's about 7 to 8% of the world's emissions. So there aren't many technologies and industries that you can look at which, if you could cut the emissions by 50%, let alone if you can get to 80% or whatever, that can have, let's call it a 4% impact on global emissions. So we think that the methane emissions out of livestock's an area which, like there are a lot of companies in the space. Is it going to be winner take all? We doubt that. There'll be a number of options. Hopefully our portfolio company will be one of those, but it's a very exciting space. Then the other one is nitrogen fertilizer, which is about a 3% global emission number. And we've invested in a company called PlasmaLeap, which is an Australian company that basically uses electricity to drive plasma to break the bonds of air, and the nitrogen side of that can be used as a fertilizer.
Wonderful. So broadening beyond agriculture, what are your typical domains that your current focus is on that you feel is going to drive climate action very substantially?
So we look at the real big emitters. I mentioned the 2 ag ones. Obviously there's steel, cement, HVAC being your air conditioning systems. So they're sort of, I guess, the real big items, which we'd love to see every day, but you don't see companies which you think are going to be able to succeed in those areas very often. So we look for those as the number one, and then we look at smaller areas. So we're just in the process of investing in a company which is about dehumidifying, taking moisture out of products. Their first step is in waste, so then that waste can be upvalued, because moisture is one of the biggest costs in industry. How do you remove moisture? So if you've got a cheaper, better way of doing that, that can have a significant impact on what you can do with products. We've invested in we actually co-led Alt Mobility, which is a Delhi-based EV company, which is what we'll call an enabling tech. So we look at some of those enabling techs, and those enabling technologies can actually change some of our risk profiles, because generally they will get to profit earlier than a core deep tech bit of hardware, which is predominantly what we invest in. So we look to balance our portfolio a little bit between the deep tech and some of the enablers, which are quicker.
Here is, we kind of developed a philosophy in this space where we said appropriate, particularly we're looking at energy as a vertical. We look at appropriate use of energy followed by efficiency. Then you do RE integration, and at the end comes the carbon dioxide removal, which we feel is and should be at the end of your thought process in terms of decarbonization. So when you look at it from an investment perspective, how do you view those, and your thoughts on a lot of companies that try to mitigate by capturing CO2? Does it even make sense, or what would be a way to look at those kind of ventures?
So I think it goes back to that cost. So there are certain industries, so we heard about the plastic in the last talk, 2 to 3 times current cost. To us, that doesn't work. You can also look at sustainable aviation fuel, where the costs are substantially higher than the incumbent fossils. So in those situations, an offset or a storing or whatever seems to be logical in our view. CCUS we struggle with. So the question is, what is the technology which actually is safe for the environment, that gives long-term storage? So we have one company called Cararb out of the US, which uses Ultramafic rock to store carbon via a water medium, and we think that's probably the cheapest methodology for storing carbon that we've seen, and a lot better than direct air capture and then trying to put it underground, etc.
These are tough spaces for an innovator. Like, there are lots of innovators out here and also investors. So these are tough spaces to identify people, build technology, and also decide to invest. So when you are evaluating these kind of companies, can you share some thoughts on how are you looking at those companies? I mean, what comes first and the rest?
I guess firstly we have to have a view that the core technology makes sense, that the team has a skill base to get it to a stage. And reality is a lot of entrepreneurs who come up with an idea may not be the same people that take it from year 8 to year 15, different skill sets and different desires of the individuals. So understanding their views on how they will adopt as the business grows and becomes hopefully super successful is really interesting for us. I think the biggest thing that we're seeing or concerned about today is, with the advent of AI and the speed of iteration of ideas, is actually how does that that team in these startups actually view the speed of iteration. So we've seen some companies where we absolutely love the technology, but we've been really concerned about the speed that they're viewing their iteration and getting to market. And it's interesting when you're speaking to some founders, they go, oh, I don't want to spend $50,000 on this bit of capital. I'm going to sort of drag it on and spend 4 extra months rather than spending the capital. But in that 4 months, you've burnt $300,000 of overheads in labour, etc. So there needs to be a real focus on what your overall costs are and how to get that product to market. And then we also see that a bunch of founders try to create the perfect product before going to market. And reality is you're never going to have that perfect product. You are always going to change it at some point in time. So get to a stage where the product is commercially usable and reliable, but it doesn't have to be perfect. You are going to change, even if you think you've got it perfect and not going to change it, I guarantee you will find an improvement and change it. So don't spend that, like that 80-20 rule, don't spend 80% of your time trying to improve that last 20%.
Wonderful. So, you've probably now seen quite a set of teams, and you also invested in a few teams. Are there some examples that you think are really doing well and that you would want us to look up more, maybe share?
Well, I'd like to think all our teams are brilliant, but with time some become more brilliant and others less brilliant. I think the brilliant teams are those that can also adapt to changing circumstances, and obviously in the last year there have been some huge changes. Like when we talk about, like we invest globally and people go, oh, how do you manage the risk? And as we know, most funds in this space have been US-centric for a long time. Well, who would have thought that the most political risk would actually be the US, which is certainly what we've seen in the last 8 months or so. So being agile in your mind and your ability to make changes, I think, is really critical. And we've seen that in a number of our companies, PlasmaLeap, Cararb, Alt Mobility have been amazing at how they've changed from being a last mile delivery vehicle. Now they're direct to consumer, etc.
Wonderful. So that leads me to my next question. How do you see this climate action play out in different parts of the world? And as we had seen so much of changes in the last 8 months.
I think you just go and look at what has happened with the EV market in China. I think it's the biggest example and support of our philosophy. Up until 18 months ago, EV purchases in China were happening, but nothing particularly exciting. And then this last 18 months, the costs have plummeted, and you've seen adoption of those EV vehicles in China take off. So now it's well over 50% of new car sales are EV. It's purely because they're cheaper to purchase and cheaper to operate. And I think that's the philosophy we need to have across everything, whether it's a bottle of water, it's a microphone, it's nitrogen fertilizer, whatever it may be. If you can be price competitive with a product which performs as well or better than the incumbent, you've got a good chance of having a significant impact on consumer and business purchasing behaviour and get your adoption up, and with that improved purchasing decision by that purchaser, you're going to get the climate impact.
Right. Thank you so much for that. So maybe last 2 questions. Is this your first time here in India?
No, I first came in 1990 for a school friend's wedding in Baroda.
Now, how do you see the changes happening here, and what's your thought on how this market is evolving? I think you probably have experience across the markets, Australia, APAC, USA. How do you see this market evolving, and how does that align with your future strategy at the Twynam Earth Fund?
Well, I think India's doing like what we've seen in China in the last sort of 15, 20 years. India's in that process, and it's going to be, I think, the global driver for growth and a provider of a lot of inputs, etc. Obviously, we've got Africa sitting there not knowing really, is Africa another false dawn, or are they going to actually come through with the goods? Time will tell, but India, I've always loved visiting India, and I have some friends from school and university who are Indians. We've got employees in Australia who are Indian, etc. So it's, I certainly feel some connection here.
And your thoughts on how your investment thesis is going to pan out in this region, and how are you looking at this region?
Yeah. So in the fund we have 11 investments to date. 2 of those are Indian. So I think, and we're probably seeing a greater percentage of interesting new companies come from India than we have in the past. So I would expect that our percentage of portfolio companies out of India increases over time.
Thank you so much, Johnny. Thanks for that. And with that, I thank you for taking this time, spending with us. And please feel free to explore. You are in one of the strongest deep tech ecosystems here. If you have not been here before, we would be happy to show you around. And thanks a lot.
Looking forward to it, and thank you for having me.
Thank you for your insightful session. I would like to call upon Mr. Hardik Banushali from SCALE to present our mementos to our speakers.